Great.
Okay. I need to switch places with you. I think that last summer you might have heard the phrase liquidity crisis, liquidity crunch, mortgage market meltdown, things like this, housing market slump. These are phrases that are in the papers all the time. We just thought we could talk to you a little bit more about it, but we found something, we came across something which we thought was informative and humorous. So we'll just rip through it. We're going to just kind of read through the slides, and hopefully you'll get a kick out of it and learn a little bit in the meantime. And then we can get on with the substance of the presentation, so to speak.
So guys, my name is Stefano. The main topic tonight, really what we're going to talk about a few different things, but the main thing is FHA. And the key point, and really, because of this mortgage mess, FHA is the solution the government came up with to bail out the situation that we're in. So if you as a realtor want to make money over the next 5 years, you need to understand the FHA product. It's key, absolutely key. So, like you said, the next part is this is strictly for comedic fun, to understand what happened, why are we in this mess.
Yeah, what led us down this road?
What led us down this road? Here's our agenda. We'll just go along.
That's the slate.
That's the slate. Real quick. That's Mike, Stefan, that's Pete. Pete's with us, CRA program. Janet, real estate attorney, is with us as well. And then that's me again. I get to be the closer tonight. That's him. So here we go. Subprime primer.
So down at the mortgage brokers sometime last summer.
Gee, I'd like to buy a house, but I haven't saved any money for a down payment, and I don't think I can afford the monthly payments. Can you help me?
Sure, since the value of your house is always going up, you don't need down payments anymore. And we can give you a really low interest rate for a few years. We'll raise it later, okay?
Sure, no problem. There's one thing. My employer is a real jerk, and it may not verify my employment. Would that be a problem?
Nah, we get you a special liar's loan, and you can verify your own employment history. How's that?
You guys are awesome! You're really willing to work with guys like me.
Well, we don't actually lend you the money. Bank's going to do that, so we really don't care if you repay it. We still get our commission.
Wow, let's get started!
A couple weeks later, same bank. Hey, you know what? I better get rid of these crappy mortgage loans. They're starting to stink up my office. Thankfully, there's some really smart guys in New York who'll buy them and perform their financial magic. I'll call them right away. And let's see what these smart guys in Wall Street do. Phew! You'd better get rid of these crappy mortgages before they start attracting flies, right?
But who would buy this crap, boss?
I've got it. First, we'll create a new security and use these crappy mortgages as collateral. We'll call it a CDO or maybe a CMO. We could sell that CDO to investors who promise to pay them back as the mortgages are paid off.
But crap is crap, isn't it? I don't get it.
Sure, individually these are pretty crappy loans, but if we pool them together, only some of them will go bad. Certainly not all of them. Since housing prices always go up, we really have very little to worry about.
I still don't get it.
The new CDO will work like this. It'll be made up of 3 pieces or tranches, and we'll call them the good, the not so good, and the ugly. If some of the mortgages fail, as surely some might, we'll promise to pay investors holding the good tranche first. We'll pay the not-so-good investors second and the ugly investors last.
I'm starting to get it, and because the good investors have the least risk, we'll pay them a lower interest rate than the other guys, right? The not-so-good will be a little better rate, and the ugly guys will get a nice fat interest rate.
Exactly, but wait, it gets even better. We're going to buy bond insurance for the good piece. If we do that, the rating agencies will give it a really great rating in the AAA to A range. They'll likely give the not-so-good piece a triple B to B rating, still pretty good, and we won't even bother asking them to rate the ugly stuff.
So you have managed to create AAA and triple B securities out of a pile of stinky, risky mortgage loans. Boss, you are a genius!
I know. Yes.
Okay, now who are we going to sell the 3 pieces to?
Well, the stiffs at the SEC won't let us sell this stuff to widows and orphans. So we're going to sell it to our sophisticated institutional clients.
Like who?
Like insurance companies, banks, small towns in Norway, school boards in Kansas, to anyone who's looking for quality, high-quality, safe investments.
But surely nobody would buy the ugly piece, would they?
Of course not. Nobody's that stupid. We're going to keep that piece and pay ourselves a handsome interest rate.
This is all great, but since we are only using the smelly mortgages as collateral on an entirely new security, we haven't really gotten rid of them. Don't we have to show them on our balance sheet?
No, of course not. The guys who write the accounting rules, They allow us to set up a shell company in the Cayman Islands to take ownership of the mortgages. The crap goes on their balance sheet, not ours. The fancy name for this is SPV, or Special Purpose Vehicle.
That's great, but why would they let us do that? Aren't we just moving our own crap around?
Sure, but we have them convinced that it's vitally important to the health of the U.S. financial system that investors do not know about these complex transactions and what's really behind them.
So let's drop in to see the accountants. Sir, as an investor and a concerned citizen, I demand that you force our financial institutions to show greater transparency and openness in their financial reporting.
Believe me.
Gee, we never saw it coming. So this is in Norway, right? The Norwegian
Example.
pension fund. Hey man, what the hell is up? We're not receiving our monthly payments.
Yeah, I meant to call you, but it's been really crazy around here. It seems the losers who took out the mortgages backing your CDO aren't able to pay them off.
Wait a minute, we bought the AAA good piece of the CDO, you know, the safe one. We're supposed to be getting paid first.
Well, unfortunately, the loans were quite a bit crappier than we originally thought, and there's very little cash coming in. Frankly, I assure you that we are just as disappointed as you are.
But you told me that housing prices always go up and that your borrowers could always refinance their mortgages.
Yeah, that was a bad assumption. We screwed up, sorry.
Bad assumption, my frequent Norwegian behind. What about the AAA rating from the agencies?
They screwed up too.
But the security was insured. What about the insurer?
Are you kidding? There's no way they have enough money to set aside to cover this mess. They screwed up too.
Well, that's just great. What am I supposed to tell my villagers?
Tell them you screwed up.
Believe you!
Believe you.
So there you have it.
That's what happened. So.
Nice.